Hey, what's up everybody? Michael Lamar here from Wall Street IO, the #1 backtesting software for swing traders, with a quick update for you about Apple. We obviously had a tremendous run here on the stock, and right now we have what we call a doji. A doji is oftentimes a sign of compression or indecision. Now, last week I highlighted the 210 area as a potential resistance point, and so far that's been holding actually as resistance. We got right up to it on Thursday, you can see, right up to it, and then got rejected, ended up closing down a few dollars below that 210 area. Now, here's what I'm thinking going into the next week. We have a pretty clear line in the sand as far as a resistance goes at 210. Now, if this coming week we can get above Friday's doji, which is right around 209 and a quarter, and we can come up to 210 and actually get above 210 and hold above 210, I think we could potentially have a clear shot of moving higher. But this is a pretty clear line in the sand that the stock has said, hey, look, 210 is an area where we already have resistance. If we can't make it above 210, we're still basically compressing. Now, if we start to break below the doji here, right, because we did have a little bit of weakness at the end of the week. If we start to break below that doji, then we have support at 205, which was basically the low there, maybe 204.5. Now, if the market kind of starts to unwind a little bit and we start to drop below 205, we have support, but not really until much lower. If you take a look at this candlestick pattern, we have a little bit of support here just below 200 at 197, but ultimately the gap isn't until 192. Now, for now, because we're way up here and we haven't technically broken these levels, it's very, very neutral here short term. This is a compression pattern. It's very common for stocks after big runs to compress. This is neither bullish or bearish at this point. It's very neutral, okay? When we look at the payday cycle, again, you can see we had a really, really great cycle that happened here with earnings. We had one down day, one up day, and then Friday we failed to make a new high. So this is a very neutral sign in the stock. Okay. Now remember, Wall Street IO is the only platform in the world that allows you to actually backtest these candles. So when we take a look at this strategy with just, let's say, a 1-year time frame, we're going to take a look at the payday cycle strategy, which in its simplest form is buying at the close on the first green and selling at the close on the first red. You actually have pretty good results. You can see the results over here. Good batting average. Okay batting average, slightly better than 50%, but what again makes the strategy work is the average win is 4.5 and the average loss is under 2. So that generates a really good risk reward. It also shows you the average days right here, which is important because if you're swing trading, don't you think it's important to know approximately how long these trades generally last? Now, of course, this is an average. It's 6 days. Sometimes it's a little longer, sometimes it's a little shorter. Now, what's another characteristic we can look at that helps us potentially define when we have longer cycles and then shorter cycles? Okay, so let's use the MACD. MACD is a great indicator because when the MACD is crossed to the bulls, actually like it is now, many times we have longer cycles. They tend to last 6, 7, 8 days, sometimes even 10 days or longer. When the MACD is bearish, like it was back here in June, which is normally a pretty bad month, when the MACD is like this, generally we have very short up cycles and longer down cycles. It may sound obvious, but the stats actually back that up. So right now the MACD is bullish, but it is slowing down. Again, very, very consistent with this compression pattern that we're seeing. Okay, so all things considered, we're overall bullish. Like the long-term trend is very, very bullish here. We had a great earnings call, and as I mentioned last week, the company came out and said, hey, we're raising guidance, which is one of the best things a company can do, but we are having a little bit of overhead resistance here at 210. Now, when just looking at basic technicals here, you can see we still have this really nice up channel. Now, what's interesting is, if you take a look at this top line here, we've actually blown up and through that level. So we're above that resistance, and if we can hold above here and potentially break above 210, we could have another run on our hands. Okay, but we're very extended here. Okay, if we can't make it over 210, it's sideways and potentially down, but you know, we're holding. Now, seasonally wise, right, let's just take a look, let's say at the last 5 years. We're going to use the Wall Street IO seasonality tool. Again, May's usually good, June's usually bad, July and August are usually good. That's how this year's been playing out. That's how it's basically been playing out over the last 5 to 10 years. Now, as we head into September, we have a big iPhone announcement. Generally, Apple announces the new iPhone in September. Now, take a look at this. September is usually a down month. Why is that? Well, the market's a forward-looking mechanism, and we oftentimes get a rally into events and then a sell-off post-events. So here's what I'm going to say. Because I don't like to use seasonality in a vacuum, I'm going to say because seasonality is usually a little softer in September, I'm going to say if the MACD crosses to the bears anytime towards the first week or so of September, or anytime in September, I'm going to go ahead and issue right now a caution, because September seasonally is already kind of a soft month for the stock, especially post iPhone announcement. So if we have a MACD that crosses to the bears, right, and we, let's say, start to top out a little bit more, and the MACD crosses the bears anytime around the first week of September to the middle of September, especially post iPhone announcement, I'm going to go ahead and issue at least a short-term caution. And what that means is, I say short-term, and what that means is for shorter-term trades. Now, long-term Apple, I think, is looking really great. If you're holding stock, holding leaps, anything like that, short-term, like you're trading calls that expire anything within like 14 to 21 days. If those things happen, there's a caution, okay? Now, the good news is that I think if we kind of start to plan out our trading for this fall, I think that if we do have a sell-off post-iPhone in September and the MACD goes bearish and we form bearish payday cycles, all that, I think it's going to set up for a really good October. October is generally one of the best months of the year. So rather than being like, oh, Apple's going to sell off and being worried about it, think of it like this. Like, I'm generally an optimist, and maybe that's why, but think of it like this. Whoa, if we get a sell-off, that's going to present an amazing opportunity for us to potentially ride up in October, right? So think of it on the bright side, right? It could set up. Now, what's interesting is all bearish cycles are what actually leads to the bullish ones. And so it's good to pay attention to that, because while some people might be afraid or worried about bearish cycles, consider an alternate context in that the bearish ones are actually what springboards and sets up the bullish ones. Okay, so you can kind of think of it in that context. All right. So a couple things. We've got this doji here. We've got the MACD. It's still bullish. We've got this long-term trend line that we're actually slightly above. All those things. Again, slight caution. Not yet, but if the MACD goes bearish, right, around September, right, especially post-iPhone, a little bit of short-term caution, but you could use it potentially as a buying opportunity if we start to rally back up in October. Now, this last week, we had a huge announcement here at Wall Street AO. For the last year or so, we've been working on a brand new platform for our members. We're so excited about getting it released. We're not quite ready yet. We'll probably start taking beta testers hopefully in the next 2 to 4 weeks. We're really excited about that. Now, one of the cool things that's going to make it so powerful is we'll be able to backtest things like this doji pattern or a bullish engulfing pattern. And one of the cool things that we did with Smart Studies here on our existing platform is we built this whole condition editor so that you could actually go and backtest all these indicators. And the mission there is that we don't want people guessing if the indicator that they're using actually works. And so we built this in a way that you can actually get the stats on all these indicators and moving average crossovers to see, hey, does this actually work? Because we don't want anybody guessing. And one of the cool things, or a couple of the cool things that we built into our new platform, which is here, is the ability to actually backtest candlestick patterns like dojis, bullish engulfings, things like that. We also created the ability to separate the buy and sell conditions. With our current platform, right, the buy condition is always the sell conditions. Same buy condition, same sell condition. In the new platform, we're actually going to be able to separate that. So you're able to say something like buy when the payday cycle starts, but sell when the stochastics crosses to the bears. Bada beam, bada boom. And we've got all these really, really great new stats that we've developed around the strategies that are going to make it a lot easier. Now, what I'm going to do for everybody who's interested in seeing it, I've done a demo for it this week. I'm going to post the link right below this video so you could click it. It's on our blog. It's free for everybody. You could check out the new demo of the platform. Again, we're really super excited. And we absolutely appreciate everybody's patience and support because we've been working around the clock on it. Huge thank you to our team. I'm really excited about it, obviously, and I just wanted to give you a quick little scope of some of the new cool things that it can do. Now, the link to that will be right below this video. So I think that's a wrap for this week. Have a great Sunday evening, everybody. This is Micah Lamar, and I can't wait to hang out with everybody and trade with everybody throughout this week. Have a great night, and I'll see you on the inside.